I will manage your money just like I manage my mother's money. Money isn't everything, but it allows you to live your life, right? It's not should be your end goal. So allow people like me to make money for you so you can enjoy your life. We have outperformed the S&P on a
Thuy has 15 years of working experience on Wall Street, and he worked a lot in the asset management field, have wealth of knowledge in investing. I brought Thuy on board is we work with a lot of business owners. We help them grow the business from a couple million to up to 10 million. And then they were thinking about exit. Well, after they managed to sell their business, now the question comes, what's next? How do I manage my wealth? So that's the reason I have brought Thuy on board. Thuy, could you please share a little bit about your background, your experience?
Sure. Happy to answer those questions. I really began my formative investment experience after graduating from business school. I went to the Wharton School of Business at the University of Pennsylvania. I majored in finance. And it was after that I really transitioned into the investment management business, working for large investment firms such as Neuberger Berman in New York City, MAN GLG, which is one of the largest hedge fund managers in the world. So I've been working in the investments business for over 15 years now. And currently I'm the chief investment officer with KYUR, which is a wealth management firm based in Newport Beach, California.
Wow, that's really impressive background. And you mentioned that I saw on your website you went to the Wharton Business School. That was a very famous school. And tell us a little bit more about your qualification.
Sure, there was a point in my career where I decided getting an MBA was the right degree for me. Certainly, there are a lot of great business schools in the U.S. There are 20 very good business schools. Each business school has its own culture, has its own industries that they particularly students go into. And Wharton in particular has a very strong reputation of helping people transition into the investment management industry. There's a very strong alumni network. There are very strong career services and student initiatives at the school to help you make that transition. So, for example, when I was at Wharton, I was elected by Wharton finance professors to be a Wharton Fund Fellow. And what that does is it allows MBA students to manage a portion of the University of Pennsylvania's endowment. So it provides students a real hands-on, real-life experience, what it means to manage money, how to look at investments, and it helped me transition into the investment management industry. So Wharton for me was my number one choice. That's where I wanted to go. And I was very happy and fortunate to be there for 2 years, had a fantastic time, and would not trade that in the for anything really.
Yeah, oh, that sounds great. I'm sure lots of people actually would like to go to the school. And could you tell us a little bit more about like what happened? Like you graduate from the school, and how did you get into what you're doing right now? I guess the last 15 years.
I mean, part of the thought process going to Wharton is recruiters will come to your school, right? And so I knew that recruiters from investment management companies would target MBA students from Wharton. So that's partly why I chose Wharton. So I was fortunate to have a lot of recruiters come to campus from the Fidelities of the world, very large asset managers looking for MBA graduates to train in their companies. And for me, it was the same path. I was recruited from an investment management company that was based in New York City. And that was my first job after Wharton. And then I worked at several other different firms subsequent to that, starting as an analyst, and you work up your way up to portfolio management.
Right. Wow.
Very traditional career path for someone in my case, when you go to MBA, very traditional career path.
Right. Okay. And now, so you worked on Wall Street for over 10, 15 years. Now you're working at KYUR as a chief investment officer. Could you give us a little bit, tell us a little bit more about what you do now?
Sure. So KYUR is a wealth management firm. We're a registered investment advisor in California. And really our singular mission when it comes to our clients is really building a financial legacy. It's really helping them build a financial nest egg, not just for themselves, retirement, but for those who are fortunate to really leave money for future generations. And so what we do is we help people build their wealth through very different vehicles. typically through equities, bonds, as well as other alternative assets, just crypto. But it really depends on the client's investment goals and risk tolerances. So what we do is we work very closely with the client,
Yeah.
understand what their goals are. And based off of that, we try to customize an investment portfolio for them, what we call a total wealth solution. And that's typically composed of different types of strategies, trying to reach their investment goals, but more importantly, really understanding their risk tolerances and their risk profile, and working with them on a constant basis. And so what we pride ourselves on is all our clients have full access to all the people managing their money. They're not talking to some young associate at a large brokerage. You're actually talking to the person who's managing your money. So that's what we do. That's what we do every day. We try to make more money for people very simplistically, and in a way that is conservative, steady over time, 5, 10, 15 years, where they can really build their wealth.
I like the idea you help people make more money. That's great. Now, would you say, what type of clients are you typically working with, or what type of clients would benefit from the service?
So we work for, there's several different types. First of all, the most important thing is really building a partnership with our clients. Building a partnership, a long-term relationship that lasts 5, 10, 15 years. Maybe start with the parents, and then maybe with their children. So so there are probably 3 kind of profiles. There's retirees who have recently retired, who have certain income levels they need every year to live. So we help preserve that as well as grow. So they may be more income-oriented type investors, whether through dividends, fixed income investments. So then we're conservative. The other end is younger people, the professionals, probably in their mid-30s, who are just starting out. They're building their nest egg. They're a young couple. They're thinking about buying a home, or maybe they have children. They're thinking about putting away for the college fund, so they want to, again, build their wealth. We also deal with a lot of small business owners being based in Orange County, California. It's an incredibly entrepreneurial part of the country. Given the immigrant demographics, I'm Vietnamese, and so there are a lot of Vietnamese here. So a lot of entrepreneurs here, really straight, regular businesses, and we work with them. A lot of times they have liquidity events where maybe they want to sell one of their shops, and they want to perhaps decide what to do with the proceeds from that investment, and we help invest that for them. We also help them to consider some of the planning aspects around that. And then, so those are the typical clients. And then we have young, successful professionals, doctors, other finance professionals, people, entertainment, wealthy people who are, again, looking to grow their wealth over time. So those are the types of people we work with.
Okay, and that's very insightful. Thank you, Thuy. Now, we work with lots of business owners. I guess one of the most common questions that people or business owner would think about is, right now I'm planning to sell my business. And what are the steps that should be taken to ensure after I sold my business, and like what I need to be aware of, what the steps I should be doing to preserve the wealth?
Right. So ultimately, I mean, there are 2 very big questions that one has to ask themselves. First of all, the tax impact, right? Because ultimately you will have to pay taxes on that.
Yes.
And secondly, when will I get the cash, and how much cash will I get? So those are kind of the 2 very broad issues. And there's a very intricate, and there are very many steps to that, and there are certain different people involved in that process. So if I was a small business owner, I mean, you would need a team or an entity that can satisfy the various steps involved in that. And I'll break them down very broadly. There are sort of 3 very large pieces. The first is a tax implication. So you really have to talk to a tax expert to understand the most efficient way to handle those proceeds in a tax efficient way, right? That's the first thing. Talk to a very good tax person. Secondly, to the extent you want to leave money for your future generations, or you want to set up entities, maybe a trust for people, for your kids or your grandkids, you want to talk to an estate lawyer. He will help plan out the things you need to think about legally, the legal structures that will allow you to make sure money is left for future generations, and also the most tax efficient way to do that. Thirdly is someone who can help you sell the business, right? I think, I believe you spoke with Martin early on how to sell a business. I think you need to talk to an advisor and perhaps ways to exit the business and get the highest price you can get. So that is something with capital markets experience. And then finally, as I step into equation, a wealth manager, once you have the money, I will help you manage it. I will take those proceeds and help you grow it in a way that you need to do to meet your future investment objectives, given your risk tolerances. Now, ideally, someone like me would be kind of involved in the middle. I would be working with those other three people that I talk to. And so I can be kind of the coordinator. So I can understand exactly what's going on. So I would be kind of in the middle, but they would handle all that first. And I would kind of I'd be working with them, collaborating with them, but ultimately they will handle that. Once you actually sell the company and you have the proceeds, then I step in and help actually manage the money for the client.
When people are looking for, I guess, the financial or investment advisor, what are the quality that people should looking for, assuming not everyone is based on the West Coast? So could you just elaborate that a little bit, especially you don't want to pick the wrong person. What are the things business should or should we don't want to look for?
Sure, no, it's a very important question. There are many people that do this and so I'm a registered investment advisor, which means I'm licensed. I have to take a test. I'm also registered with the state. So again, so they regulate me. So the first thing I would start off with is checking their credentials. Are they licensed? Because as an RIA, registered investment advisor, I have a fiduciary duty to act in your best interests. Okay, so that is the most important thing. You want to work with someone who is properly licensed, 67, 65, 66, who is registered either with the SEC or the state, because by doing that, we have a fiduciary duty to follow your best interests. And if we don't, then we are not doing our job. So you need to start with that. After that, we try to describe it as kind of the 7 P's to kind of keep it simple. And so the first P is experience, portfolio management experience. How long has that person actually been managing money, right? Like in most professions, experience is great. Whether it's a doctor or a lawyer, you want someone who has a lot of experience, more often than not, right? And so at KYUR, I have over 15 years of experience. The team has an average over 20 years of experience of managing investment portfolios through different types of environments. So experience, I think, is very important. Credentials, I think education is not the end all, but certainly, their background, educational background, just tell you something about them, perhaps on their training. You don't have to go to the best schools to be good RIA, but it tells you something about that person. Secondly is perspective. With experience comes perspective, right? There have been many stock market cycles over the last 50 years, and no 2 market cycles are the same. And so when you have perspective and you recognize these attributes of certain market cycles, it helps you prepare for the next one. So again, experience and portfolio management experience and then perspective are very important criteria that I think you should think about when you're looking for an RIA. Thirdly, and probably most importantly, is performance, right? Do we make money for you? Do we not? It's very simple, right? RIAs will charge you a management fee, % of your assets. And so our job is to make you money. And if we don't make you money, we're not justifying our fee. And the most objective way that we suggest people look at it is evaluate an RIA over full market cycle, which we define as 5 years, and then compare the performance versus an objective benchmark. So for example, if they do equities in the US, compare their 5-year annualized performance to the S&P over 5 years. And that will give you a sense of, their skill as a manager over 5 years, because a lot happens in 5 years. And so look at their 5-year annualized performance versus the S&P. So for example, at KYUR, we have outperformed the S&P on a 5-year annualized basis. So performance, at the end of the day, performance is really what matters, right? But with portfolio management experience, with perspective, should help someone have better performance for you. That's why the first 2 are so important, more often than not. Okay. Fourthly is process. You need to have, there's different ways to manage money. Everyone has their own risk tolerances, what they're comfortable with, what they're not comfortable with. So it's really important that you sit down with the RIA and understand their investment management philosophy and whether you agree with it. Maybe they're a super high risk investor. They like a lot of small cap stocks, but you know what? You're more conservative. You don't want to see much volatility. You prefer large cap stocks. Or perhaps they're a value investor, but you want growth stocks. Again, there's nothing wrong with either approach, but the investment language that you're going to speak to each other is going to be different. And the way they manage it is just going to be different. And it's just going to be hard. You just won't be on the same wavelength. And so it's really important to understand how the RIA thinks about managing money, their process, and whether it fits with your kind of your personality and your risk tolerance levels. The investment process is kind of the fourth P. As part of that, I would also consider the risk management philosophy, right? Yeah. Everything's great till when markets go up, but what happens when markets go down, right? How does the RIA manage that downside? And for us, risk management, actually, the investment process begins with risk management. It does not end with risk management. So we always think about, okay, if we put you in this investment, how much money can we lose? Not how much money can we make. So I think thinking about the downside is very important because markets generally go up over time. But the key to outperform over time is when the market's correct is don't go down a lot more than the market, right? You don't want to have to, the ground you have to make up, you don't want to be so great that it's just too late to catch up, right? So the key is managing, don't go down as much as the market. Right. So that is a very important part is risk management. And again, that comes with portfolio management experience and perspective. We know that markets don't go up straight. They don't go up every year. There will be time markets will be down 15, 20%. So what do you do in that situation? How do you protect the portfolio? How do you get ready for the inevitable bounce in the stock market? That's why portfolio management experience, perspective is very important, which in terms of that processes. Okay. And then the fifth one, so I can stop there. Those are the main things. Okay.
When you talk about portfolio management, I know very little about finance. Like what kind of portfolio? Like let's say you've got this amount of money that clients want to invest. What are the areas? How do you manage? What are the things that you will be looking into investing? Is it stock or is it like bond? Is it what's involved?
So we employ a quantitative investment strategy, but we have the capability to invest in stocks, fixed income, as well as some alternative assets such as crypto. Our main product is an equity product. So our flagship strategy is primarily an equity product. Typically, our investment strategy on the equity side has a bias toward high quality companies that have very large, strong competitive market positions in their industries that we expect continue to grow and maintain over the years. So what that means is historically, we tend to have a bias toward larger cap stocks, typically a portfolio of about 40 to 50 stocks. So we don't necessarily go into risky stocks. We don't believe, now, if an investor asks us, we can certainly talk about that. But we're typically focus on high quality growth stocks that will do well in all types of different environments. And then the fixed income piece is really about, that may be more appropriate for older clients who perhaps want more income and less growth. So we have the capability of adding an income component to the portfolio. And then finally, for those who perhaps are a bit younger and can afford to take a little bit more risk, we can certainly do crypto and other types of alternative asset classes where they aren't as correlated to the stock market. There's higher growth, but clearly higher risk. But again, that's sitting down with the client, understand exactly what they're thinking about, and so that we're on the same page. But to sort of answer your question, the team here has invested in equities, fixed income, foreign exchange, and commodities in those direct markets. So we have invested in a lot of different asset classes, not just traditional, but also in hedge funds, shorting vehicles. So again, we can do a lot. And that's part of, going back to what you asked about looking at an RIA. One thing, the other P I would add is the products they offer. So we offer a suite of products really, not only in terms of asset classes, but again, traditional products as well as products that will benefit if the market goes down. So again, together we can offer a very interesting suite of products as part of our total wealth solution that we think is incredible, kind of almost like one-stop shopping, so to speak.
Gotcha. Okay, thanks very much. Now, going back to what you should do, what you should be looking at as a person who wants to invest money. What are those things, or what could go wrong? What are things to avoid, absolutely to avoid that? What are the common mistakes people make?
Well, I think first of all, again, I think it's important to work with someone who's licensed and who's an RIA as opposed to just a general financial advisor, because again, RIA has a fiduciary duty to do what's in your best interest.
Yep.
Okay, that's the first and foremost. That goes with credentials and whatnot. Secondly, I would also kind of figure out, understand the fee structure.
Yes.
What are they charging you to manage their assets?
Yes.
Exactly, because over time, fees are deducted from your assets, right? So over time, fees will just naturally reduce your returns. Now, people don't really mind when the markets are going up, but clearly when your markets are going down, it's going to go against you.
Yeah.
And you need to understand the fee structure. You need to understand how they are compensated. So there are some instances where the advisor may be compensated or incentivized to sell you products. Perhaps they work with a large brokerage firm. So if you sell that firm's mutual fund or other product, they are financially compensated for that. So again, there's a conflict of interest there, right? Again, it goes back to the fiduciary duty that they have, that you would want to work with someone who has that. We don't do that. We charge one fee. It's a flat management fee as percentage of assets. We are independent. So we're not affiliated with any large brokerage firm. We're not trying to sell you their products, nor are we influencing them. We're totally independent and can manage your money the way we see fit. So those are a couple of things that I would, just as a kind of a litmus test.
Right.
And again, the 7 Ps, again, are also a very effective way, a checklist to determine whether they fit whether the right advisor for you.
Right. Is there such a platform that you can browse, find the different advisor? Let's say if I just sold my company, I'm looking for an advisor. Where do I look for them?
I mean, there's certainly many online resources. Some of the large online brokers can help you with that. I mean, there's a lot of people a lot of ways to find that out. So again, I would actually suggest, be honest with you, I would talk to people who you trust. I would talk to people who you trust, perhaps who work with someone or who are familiar with somebody who you can refer to. Again, I think it's just it's very much a relationship business at the end of the day. It's built on trust and someone, you trust with their money. And I think if there's someone who already works with someone or perhaps knows someone who they kind of are familiar with, start with that, because there's a lot of information out there and it's really hard to know. But I think the framework I've presented at a high level is one way. But start with your friends, start with these types of webinars, people like you who are trying to educate people, start with that. I think, you are doing a great service trying to help people also filter through that. So these types of sources where the advisor is happy to sit down and talk about it, I think is also helpful. That tells you something about the advisor, like how do they think about things, right? I always tell people, I will manage your money just like I manage my mother's money. That's all I can tell you, right? So, at the end of the day, if I manage it like it's my mother's money, like it's my sister's money, that's how we will manage your money. And that is the most simple commitment we can make to you. So if you can find someone who will tell you that, then talk to them.
Yeah. Right.
But again, it goes back to the 3 Ps again. Look at portfolio management experience, look at their academic pedigree, look at their performance, look at their perspective. Start with that, because that tells you a lot. And then those other issues will come up. But again, you are paying an RIA fee. Their job is to generate wealth for you. Their job is to generate returns for you on your capital. And the best way to determine that is look at their performance. It's very simple. If it's a performance, don't talk to them. Simple as that. It's much like going to an operation. If you survive, then that's a good doctor. It's very binary. So again, start with performance, start with experience, and start with pedigree as the initial filter. And then try to meet with them, sit down with them. How accessible are they? Are they willing to talk to you? If you have a concern, will they pick up the phone and listen to you? Or will they just say, you know what, we'll talk to you in a quarter, don't bother me, right? Again, that's another important. So we pride ourselves in working with people, in being accessible, hearing your concerns, and really forming a partnership to help you reach your goals.
Right. So thank you very much. That's really helpful. Would you, I mean, guess you have a years of experience. Would you give us some sample, especially some red flags that people should watch for when they're choosing a advisor? Like you can, if you check on, everybody said they're good. I can, how do I tell? Like if I don't have the connection for the referral?
I'll put it, this is kind of similar. It's kind of, what would you do if you were having a very important operation, right? And you had to pick doctors? It's a very much kind of the same mindset, right? And again, you don't have to, there's not a right way, there's no right path to be a good RIA. Right. But I can simply tell you from my experience what I think I would be looking for if someone asked me. And again, it goes back to experience. How many years have they actually been managing money? To, under what situations and who do they do it with? And why that's important is because, working with a large investment firm is very important. It teaches you how to do it right. Yeah. Not just from an investment perspective, but most importantly, it teaches you what it means to have a fiduciary duty, right? What it means to put your client first. Yeah. Right. And it really teaches you that. And so I think the portfolio management experience and where you work, and listen, going to Wharton was incredibly helpful. Really taught me business ethics, how, what's the right way to do things, following compliance, how to run a business that's compliant. Again, those are very important parts. It's not just investing. It's, there's other parts of running a successful investment business. And then again, performance. Again, not everyone's going to outperform every year. It's very hard. And so hence over 5 years, I think is a good way to see if they're good. Yeah. And then after that, try to sit down with them. How accessible are they? Will they sit down and talk with you? Will they listen to you? Again, that's where you talk about, you learn about their philosophy, how they think about risk. That's where personal conversation is very important. Right. But I think the first few things are a really effective filter to start with.
Thank you. Yeah, that's helpful. Now, I know many entrepreneurs struggle with deciding how much they want to reinvest in their business and how much actually they want to, I guess, allocate to the funds for the external team to manage. Do you have a rough a stats, or do you have any recommendation? What's the balance in terms of allocate those?
There's no right answer. It really depends where you are, what life stage you are in your company. What do I mean by that? For example, you may, there are a lot of sandwich shops in Orange County, banh mi shops, Vietnamese sandwich shops, right? And let's say they have 2 shops and maybe they want to open a 3rd one. In that case, it may make sense just to reinvest all the money they're making in the first 2 into the next one. And it makes no sense for them to invest their money, right? So that's a different situation. Another situation, it may be a dentist who has perhaps 5 locations, and maybe they want to sell 1 or 2 locations. Maybe they're getting older. Maybe they were closer to retirement. They want to scale back their operations. And so maybe they want to sell a couple of locations. In that case, it would make more sense for them to work with me because I can help them invest their proceeds that they get from those 2 operations. Another situation is maybe they have one business, a very profitable business, that once they sell it, they'll have a very large sum of money that they want to figure out how to plan for. And that's where I can also help. So it really depends on where that small business owner is in their life stage, on the maturity level of the company. For me, so it's on a very case-by-case basis. But again, that kind of gives you the parameters of early startup, still investing into the business. You probably don't want to talk to me. That said, we do work with companies who perhaps want some business advice. So we do provide consulting to help them get from the 2nd to the 3rd to the 4th sandwich shop and things they should think about. And there's the other gamut where you're selling the entire business and you're selling on a large sum of money, or you maybe just want to sell a couple of pieces off, and you also need to invest that. So that's where, where those are the 2 situations where we would help step in and perhaps help guide people.
Might be very naive question. For example, if I decided, okay, Thuy, I like you, I would like to give allocate amount of money for you to help me to manage. How do I know I still have a full control of the money, that make sure that this is not taking it away? Like how?
Sure.
What do
You raised probably the most important question. Where's my money going?
Yes.
And that is part of the P's, which we not get to. And so the last P of the 7 P's is protection. Protection of your assets. So you need to know where your assets are going.
Yes.
And typically the RIA or the person holding your money will not hold your money at all. They will work with a custodian, a third-party custodian, typically a large bank or financial entity, upon which they will deposit the funds and the account will be under their name. And importantly, this entity will be, at least in the US, they will be insured under the SIPC, which means that if that company went bankrupt, your assets would be protected. So if you had $100 and they went bankrupt, the government would make sure you get your $100 back. So the asset protection aspect is very important. So just to give you an example, so at KYUR, we don't hold your assets. Once you decide to be a client, you set up an account with the third-party custodian. You deposit funds in that account. You have full control over that account. You simply provide me permission to trade on your behalf. You can stop the account. You can withdraw it anytime you want. And then secondly, what's important is, as part of that, how often can you see your account? Can you see it every day? So for us, people can see their portfolios on a daily basis, their values, the trades we do every day. So those are the things from an asset protection point, which I think you raised, which is incredibly important. That is another piece that people need to evaluate. Who holds my money?
Like if I give you lots of money to manage, like do I still have access to it? That's really important.
Full access. And one of the things we provide ourselves is liquidity. So we don't lock up your funds. If let's say you're fully invested and you say you need your money, we need to sell your assets, and then there's some time for settlement, but we can quickly liquidate your fund and return the assets to you if you need it. They're not locked up for a period of time. So to rehash, you have full protection, full transparency, and full liquidity. So again, those are the things you should think about. Going back to your earlier question, a person should think about: are my assets protected? Can I see them every day? And can I sell them if I have to? And how quickly can I do it?
Right.
Those, again, factors to consider.
That's great. That's important. I think we have limited time. So just before we wrap up, Thuy, I would like to, because I saw on your business website, your father actually started a company. Could you give us a little bit background of your core team members' background as well? He wrote quite a few books about investing.
And we decided that given our skill sets, it was simply a 1 + 1 = 3 type relationship. And we really felt that together we were quite synergistic in terms of our experience in different asset classes and portfolio management experiences. And without coming together, the equity and the fixed income piece would be incredibly effective. And what we found is that in a lot of our clients that come to us were actually with a larger brokerage firm beforehand, and they were very unsatisfied with the services they were providing. Yeah. Not just from a performance perspective, but just in terms of accessibility, access to the manager. They just felt like they weren't being listened to, despite providing very large, very healthy assets. And they just felt they weren't getting the type of service and attention that they deserve in terms of talking to someone who's watching over their hard-earned money. And so that's something we pride ourselves on in terms of access, providing a high level of service, and always being there for our clients. And so we've seen a lot of our clients migrate from the larger firms, deciding that a smaller boutique firm is a place they want to go, really make sure their investment needs are being met. And so we're seeing a lot of growth on the back of that.
Right.
So that's how we came together, my father and I. So that's the genesis of him starting. And then I pursued my own path. But ultimately, we decided that it was the right time to come together, work together, and try to build something and really address a market that we felt, people were just, where their investment needs weren't being met.
Right. Yeah. Because you mentioned that you work with lots of like immigrant family that build the wealth.
Yes, our core base is all first generation, second generation of Asians as well as other minorities.
Asian
And again,
American
it's people are
minority.
very entrepreneurial. They're either professionals who retired or they run a business, an independent business here, and they're
Yeah.
looking for help. And we
Right.
feel that that is a marketplace that we've seen a lot of growth and demand from. But we work with all types of people,
Mm-hmm.
but we certainly have noticed that there's higher growth in those pockets.
Right. And I guess that's all the demographic that maybe their needs are not being met with the current services or product in the market.
That is the feedback that we get. That's the
Yeah.
feedback that we get, right? The feedback is that they just aren't being listened to, right? These people are giving 1 to 5 million assets to these managers, and they send us their account statements, and we look at it, and we kind of scratch our heads, like what are they doing, right? They're just really just not being managed correctly.
Right.
And so they bring us in, our clients, we try to fix the ship for them and get them in the right direction over the next 3 to 5 years. It's never too late to kind of fix things.
Yep.
But we really find a lot of our clients say, listen, help me. My
Yeah.
advisor won't explain to me what he's doing. I have no idea what he's doing. He won't talk to me. I just see all these fees and the
Yeah.
returns aren't there. What he talked about, I'm not getting that.
Yeah.
I don't understand why. He won't talk to me. You won't have that problem with us.
I see. So Thuy, how can we find you, like for the potential audience? How do they find you?
Well, if you're ever in Orange County, California, please reach out. You can always meet at the beach. The beach is close by. We can always have a drink at the beach. And I know some good spots. But for those who aren't in Orange County, there are a couple of very simple ways to reach us. First, we have a website, www.kyur.co. And you can always reach me directly via email. That's probably the quickest and easiest way. My email address is Thuy. That is the quickest way to reach me. I always happy to talk to clients, even just to consult with them, listen to them, and maybe provide my initial advice and decide whether there is a partnership potential there. And if there isn't, then that's fine, because I understand I can't work with everybody. You're not going to be able to work with everybody. I really believe in partnership where there is a synergy. And so not every person I will have that with. But I do know that if you come to us, what you will get is, going back to my 3 Ps, you'll get a team that has a lot of portfolio management experience, large firms in different asset classes. We have perspective. We have seen ups and downs. We've seen collapses. We've managed through collapses. We managed through bubbles. And thirdly, you'll see that in our performance. Over a 5-year period, we've outperformed our benchmark by a healthy amount.
Wow.
Right. Okay. And then the other P's, process, we have a very interesting process. We have the product offering to fit your needs, and we provide protection for you. Your assets are protected. So those are why we think we are uniquely positioned amongst other RIAs. I'm highly confident that you stack us up against most other investment teams, and I think we stack up pretty well.
Thank you very much. Thuy, you actually just answered one of the questions I was going to ask, what set you apart? Thank you very much for sharing. Then I hope the audience on the other side, for those entrepreneurs and business owners, you get some inspiration or insight from this episode. Thank you, Thuy, for coming.
Yes. Yeah, no, I'll just say to your audience, again, always happy to talk to people. Please feel free to reach out. Me, obviously, will also have my contact details, but I like helping people. I do think money isn't everything, but it allows you to live your life, right? It's not should be your end goal. So allow people like me to make money for you so you can enjoy your life. You can enjoy trips. You can enjoy time with your grandchildren. Enjoy life. Let someone like me make sure you have the money you need to enjoy life. Focus on your business. Focus on other parts of your life that you enjoy. Allow me to, give me the honor of helping you make, enjoy your life. So I'll leave with that.
I would like to focus on the business and also spend time with family, go on trips. So let Thuy take
yes,
care.
And I'll let you grow.
Thanks very much, Thuy, for coming today. All right, that's great.
Okay, take care now. Take care. Bye-bye.